everybody, it's Christian from Serene Education with the 4 major notes update for the 21st of June 2013. Okay, end of week Friday, and let's have a look and see what's in play for us on the 4 majors. Starting with the euro against US dollar on our daily. We've seen a bit of a pullback over the past couple of days. Yesterday in particular, price trading into this, through most of yesterday, trading below the 50% retracement on the weekly here, heading into the 38.2 fib monthly, and then bouncing up to the upside. And on the US session close, price closing above that 50%. So consolidation still above this prior fib retracement area here. If we see price consolidating, you can see that price closing on the actual 50% of the entire candle range is still looking positive. This was just a consolidation. So look to see if there's any positiveness. Look to see if the 50% weekly fib here at the 1321.90 mark actually acts as our intraday support for this particular pair. You can see a lot of indecision, but price is still above here. A lot of spinning tops at the bottom end of here. Price shorting into this major 38.2 major monthly fib retracement area. As long as it stays above the 50%, then ultimately what we're going to see is price moving hesitantly to the upside. The indicator box over here, there's more blue than red. However, very mixed signals intraday. R squared is not really moving. Only the shorter term time frames we're seeing a bit of movement on the R squared, but our 30 and 1 hour are not complementary, and that is also true with the RMO and the moving average, where they're both trading above price, which is an indication of negativity. So a lot of hesitation intraday, and you can quite clearly see that on these candles here. Spinning tops, dojis, not really good. However, still making higher highs, closing higher than the prior high, which is important, and then doing so trading above the 50% of the fib retracement. So here, as long as it maintains above that level, let's move to an hourly. There we go. Candles are still red. We had a blue arrow the last candle. RMO still below zero. MACD is consolidative. It's above the zero but consolidative, so there's no trade there yet again. So we want to see one or two things. We want the RMO to get above. We want a more clear decisiveness on the R squared, and we'd like to see price trading above all the moving averages. Because the price was so directive after the news announcement from the Fed the other day, the price moved quite quickly, and doing so leaving the institution moving average above or below, above price, quite aggressively. So hence the reason why your 1530 and hourly, you would see the institution above price because of this major sell-off that we saw on that particular day. So as it stands at the moment now, higher swings on the hourly. And if you're seeing higher swings, that means you're seeing upside. So here, as long as it maintains about 50% fib, let's see if we can actually see price heading back to the upside. If you want to, you can take the all-time high on that particular time frame, the hourly, to the current low. You can see the 23.6 has been breached. The 38 is above us. Ideally, get above the 38, then we should see price moving up towards the zeros, back towards that institution moving average on our hourly, which is the 61.8. So as it stands at the moment now, rather wait for a clear decisive break of the high that we've seen on the hourly chart, and then look to see if there's any momentum back to the upside. And if there is, what we're seeing here is a break above 50, then we should target the 61.8 on our weekly, which is here, which is not too far away from the institution. So the institution intraday could be a healthy target if we see a nice bullish engulfing candle break above the 38.2 here at what we're looking at here. We're looking at 13.2571-ish. On to sterling. Here we go on the daily. Here again, a lot of negativity recently for sterling against the US dollar. We were trading above the institution moving average. We were trading above a major support and resistance level high here, above the 50% retracement on the weekly. However, the news that came out just recently on the Fed has seen the sterling dropping aggressively like its European counterpart back below these levels and targeting price support and resistance levels. So if it broke below 50% retracement on the weekly, it would then head towards the 38.2 on the weekly, and then if it broke below that, then it would head to the 23.6 on the monthly, the major support and resistance level for this particular pair that goes back till since 2010. So not getting there, we end up having a hammer at the sell-off, and then we're seeing some upside. More positiveness intraday, still red, R squared in particular, we want that to, but you can see the negativity pretty much still there on our long term. However, you can see that the blue is still there intraday, so a bit of upside to be seen. And if I go to my 4 hour, bouncing on 38, profit taking, and as it stands at the moment now, making its headway back up towards that 50% retracement. Failure to get above that soon would indicate that we're seeing a pullback on the shorting side. And if you look at the current swing from the high, swing low, we could be looking in this area here back around the 50%, around the 20 period moving average for some sort of consolidation to occur. So be aware of that. End of week, RMO is flat, but still just slightly below. You can see RMO was above here up until just recently. MACD is very much negative. You can see it was making it higher. The lows were getting a lot lower as pair moved lower. Not a good sign for negativity for any trade. Sentiment is still looking negative on this particular pair, and as long as we're trading below the 50%, then we still are, because if you want to see price making higher highs looking positive, you need to break the prior high, and that's way up here where we saw before we saw the sell-off. So as it stands at the moment now, consolidativeness going into a weekend, there's a lot of risk over here, primarily to be trading before end of week. Is it worth it? For me, not the case. I'd rather wait patiently and see what the outcome is this week. After yesterday, the last thing, or sorry, the past couple of days with the Fed, don't want to be caught going long in a trade when actual sentiment is still looking to favor the downside. US dollar Swiss franc, let's have a look at this particular pair. Here again, a lot of negativity for the US dollar recently. However, coming or forming a support recently over the past week, in fact, bullish engulfing candle a couple of days ago led to yesterday seeing a bit more upside movement. However, trading into the institution moving average and failing to get above that. Subsequently, also going into the 50% monthly retracement, and not really coming away with that with a lot of momentum after all. After the US session closed, you can see right down the bottom end of the candle, and on the Asian session, very indecisive. The RMO and the MACD up until a point are still negative. However, intraday we're having a mixed signals here. So when you see price trading sideways, consolidativeness, you should see the indicator of the RMO and the MACD not really moving. The moving average indicator and the RMO not really working well with each other. R squared, however, is positive across the board, but we're getting such mixed signals that it's not even worth looking at the moment now. Consolidative, no true direction on here. It is negative because the candles are red, and the last arrow we had is red, and all the moving averages are still above price action resistance, but it's just moving sideways. And if it's not moving in a direction, you're not making any money and you're just wasting time. So here again, no direction. Like to see a direction, so rather wait to see a daily close below the current support, or get above the institution moving average and the 50% 50% retracement here, right up at 9423 to see any long-term sentiment to the upside. Both US dollar, Japanese yen. Here again, a lot of negativity recently, breaking below major support and resistance level, Fib retracements, i.e. the monthly, which is the red one of here, and then trading into the weekly Fib retracement here at 22.6, bouncing on that, then the bearish sentiment coming through, and then the shorting opportunity back towards break of 50 would have seen price heading towards the 38.2, which we saw, and then collectively seeing support, and then the move over the upside over the past couple of days, and then yesterday in particular, trying to break above the 22.6 but closing lower. However, on the Asian session, we've seen price taking that higher now, and as it stands, there's more positiveness on this particular chart than negativity. RMO, however, on the daily is still below the zero line. The candles are still red, very non-directive at the moment now, down and then up. Arrow is blue, so we have to be very patient here. MACD has just turned green, so what we need now is a blue candle to follow suit. So do we wait? If we can find support above here, the more likely the candle's gonna start to turn blue, and then we'll get a nice genuine confirmation that we should be looking for upside. Because at the moment now, this downtrend has just been breached. We want a confirmation of that. Let me just get that out the way, and that you can see very aggressive shorting. Sell, swing low, swing low, swing low, break. So we need to see support above here, 23.6. Ideally, a nice daily close above that, which would indicate that price is looking upside favoritism. And we should look into that 50% retracement level, which is our monthly Fib retracement as our first target, which happen to be price, support, and resistance level highs. Okay, so end of week, guys. Seen a lot of movement this week, and prices consolidated now after those moves. News-wise, what do we have this morning? We have current account figures for Euro at 9 a.m. GMT. We have at 9:30 GMT this morning Sterling's public sector net borrowing figures. It's going to be an interesting one to watch. Then this afternoon we've got CAD. We got their core CPR month-to-month figures, their core retail sales month-to-month figures, their CPR month-to-month and retail sales month-to-month figures. So a lot of news out for the Canadian dollar this afternoon. Nothing much for the US market. So just a bit on Europe, just a bit on one for CAD, sterling, and that's about it. So hope you have a fantastic trading day. And if you are looking at this particular template or using this template, please back it up with sound money management and follow the rules. Very, very important. Ideally, you'd like to see the long-term sentiment moving one direction. If you're seeing price intraday moving the opposite and you're getting all blue on one side and all red, then you are seeing a consolidative move in intraday. You want to obviously be trading with price sentiment. There again, it's entirely up to you if you want to trade that consolidation. Just be aware, if you are, there's a lot more risk behind that. So therefore, you have to be very, very aggressive with your entries, stops, and profit taking. So other than that, I'm going to leave you to it. Have a fantastic weekend with family and friends, and I will catch you first thing on Monday morning. Until then, you guys trade serenely.